Good morning. We will pay attention to bad debts today. Ilona was declared insolvent. Sole traders received 900 Rand as a final payment of 30 cents in the Rand. The outstanding amount must be written off as bad debts. It's very important to determine whether they give you the outstanding debt or whether they give you the received amount. If he paid his total debt, it would be 100%. We only received 30 cents, so we received 30% of the debt, and the bad debts will therefore be 70%. The amount given was the amount received. So next to the 30%, we will show that 30% equals 900 Rand. If we want to calculate the bad debts, we will take the 900, multiply with the 70, the one that we want, divide by the one that we know, 30 times 900, and that will give me 2,100. His opening balance is 3,000. He paid 900, so we will decrease the asset on the credit side with the 900 paid, and we will increase the bank asset on the debit side to indicate that there is more money in the bank. Then we have to decrease the debtor with the 2,100 bad debts so that we can close his account and he is not a debtor of the business anymore. And we will create an expense for bad debts that will increase on the debit side with 2,100. We will write the word debtors control to indicate that the double entry was completed in the debtors control account. Swart paid 400 for a debt that was previously written off as bad debts. We receive money in the bank, 400. We can't put the 400 in the debtors control because if I record it in the debtors control, what do? I create a creditor, and that means we have to give the money back to him. And we don't have an account for this person anymore because we closed his account. So it will be wrong to put it in the debtors account on the credit side. When we wrote off the bad debts, we created an expense that reduced our profits. If we receive bad debts later, when people's debts were already written off, we will create an income account, bad debts recovered, income increases on the credit side, and we will indicate that double entry of the money that we received will be recorded on the credit side of bad debts recovered. The account debited is bank, and the account credited debtors control that will increase and decrease assets. We issue a receipt as proof of payment and record the entry in the cash receipts journal. Bad debts is debited, is an expense that will reduce the profit, so equity will decrease. Debtors control is credited to decrease the assets. We will record the bad debts in the general journal, and we will use a journal narration as source document. When we receive money that was previously written off, we will debit bank to increase the money in the bank and increase assets. We will credit bad debts recovered to create an income that will increase the profits to increase equity with the amount received. We issued a receipt as proof of payment, and the entry is recorded in the cash receipts journal.